Hey, what's up everyone? This is Trader Tim, and I wanted to do a quick trade recap video from the two winning short trades that I had today. Both of those occurred at high ticks that lined it up with the high price. And so let's walk through those. And first, an important thing to note is on the daily chart, coming into the day, sitting right at this big 50% short, it made me leery of taking any longs that were uh, I was only really going to be comfortable taking a long if we were breaking above yesterday's high. And as you can see, the day's not completely closed yet. We got another 15 minutes or so, but inside day. Today's high and low inside yesterday's high and low. Anytime we open inside the prior day's range, that's a stronger case for a range bound day. If we can break out of the prior day, then there's a strong case that, then we'll be transitioning into a trend day. But those were a couple of the things that I noticed right at the open. So as I scroll back to today's open, so I should mention that when we open up in a range bound day, or when we open up in a stronger chance of being a little bit more range bound, then I really keep my eye on the nicey tick, because if we're going to be range bound, then there's probably going to be opportunities to fade highs and fade shorts, kind of fade the extremes, if you will, highs and lows, as opposed to trading in the middle of the range. So I'll go back to that 30-minute chart, and you can see this horizontal line here, 2643, is the bigger daily short. I also have a high to low drawn up from just kind of end of last week to this week, and that gives us the short that's also holding basically right at the same level. So some pressure above from the shorts coming into today. Now, as we started off the day, I noticed that we were fairly clean in terms of, in the first 15 minutes, we had a short that sold off. The second one didn't quite make it all the way to its 50%. It was about a tick away, but definitely some trending activity in the morning. And just the fact that we're kind of adhering to 50% retracements is a good sign. Then, about the top of the hour, 30 minutes in, the first thing I did was draw up the low to high, and we had kind of rallied hard off lows, and then got a high tick that happened to line up with the high price. And so I want to know where the full long is so that I don't take a short right at the opposing long. But in this case, the short setup nice and tight up here at highs, so we had room to drop down. And what I did was actually use this 50% as my first target. So I got short up here because we got a high nicey tick that lined up with the high price for the day. Good opportunity to fade. So I took the short here. I put my first target at 36s in sort of anticipation that, well, if we get a bounce and if we come back up and fail the short, I would like to at least take a little bit of profit on the trade. So I just took a small portion off at that 36s, and then I ended up trailing, as I always do on the remainder. What I did was I drew up the full 50% retracement, and the stop trailing the 61.8. That stop was so close to my original stop, I just left it alone. If you use kind of 2 ticks outside of the 61.8, depending on whether or not you rounded, you'd probably still be in the trade. But when in doubt, if I ever get in a situation where like my stop is right here and I have the opportunity to tighten my stop to, a tick or two better, I'll usually just leave it alone. Because if the trade's going to work out, your stop's not going to get hit. And if you do micromanage your stop to get an extra tick out of it, and you come up, you get stopped out, to the tick and then it rolls over and goes in your favor, you're just going to be kicking yourself. So oftentimes I just, be conservative. And since I've already taken a little bit of profit down here, I've reduced my risk on the trade. And I started with a -6 tick stop, and then I brought my stop down tighter to 39.75s. So I've already reduced the risk on the remaining contracts, plus taken a little bit of profit. So all of that helps going forward kind of ease into the trade. So I wrote it down. You can see we broke the 60/1/8 of the long, and eventually I was stopped out here at 36s again on the remaining position because we made a low, rallied, came down, broke this swing low, and so I just tightened my stop down to above the swing high. So that was that first short, and then we got a little bit of a rally, and we broke above the first 30-minute range. And we proceeded to get another high tick at highs. Oh, what were we, an hour into the day? Yeah, just about. And so taking that short at 43, what was it? 26.43.75 is where that short was. And same thing, high tick lined up with highs. We happened to come down and break the swing low, which was a good sign. And just getting short up here, leaving my stop alone until we broke the swing low. And then I brought my stop down to 44.25, so just one tick above the swing high. And for this first target, since the distance between the 50 and the -23 was a good size, I used the -23. So just a 40s, 26.40 for my first target. And then we got another leg lower. And here I did a couple of things. So we had this little double bottom here. And so when that occurred, I took my stop on a portion of the position left and put it above this candle's high. Basically, I took myself down to one contract left. So I got out of everything else here when we broke, and then I was stopped out there. And then on that last contract, what I did was just extend this down because I figured, well, we broke into the first 30-minute range again. Usually we go all the way to the bottom. If we break back into the first 30-minute range, we're going to go all the way down. So I was thinking, okay, we're probably not going to come up and rip through this 60/8 because we've broken down. This is the first 30-minute range's high, 26.41. So I had the one contract left. I put it above my stop, above the 60/8 here at a 44s. And we didn't even really come close. We just came up to the first 30-minute range high and then rolled over again. And then I was able to, we came down, hit the -23% target. So I brought drew up the next retracement. Brought my stop above this swing high. We came down close to the target. Didn't quite get there, but I went ahead anyways and drew up the next retracement, and then eventually was stopped out here at 36.25. So that's kind of how, so even if, let's say you only have 3 contracts, which is a great number to trade, using this trade here as an example, taking your first contract off at the -23% target, then taking your second contract off when you kind of the next leg down and be a little more aggressive with your trail stop. And then that last contract, you've already locked in a decent profit, so then you can be a little bit more conservative and then catch more of the longer term move. And that way you're not stuck closing out the position entirely, and then having to put on a new position with new risk where you're, going into the trade with a full stop and then waiting for it to hit your first target. And so that does a lot psychologically and for, the P&L as well. So that's kind of how I traded today. Hope you had were able to kind of stay out of some of the chop that kind of ensued after that. I didn't take any more trades. We were kind of at the hour and a half mark, 2 hours into the day, and that's where I usually cut things off. So I hope everyone has a great weekend, and we will talk to everyone next week.